The ICT silver bullet strategy is a very simple and easy to trade strategy that you can use during both the London session and the New York session. So that means entry and trade within the London session and entry and trade within the New York session. As you can see here, I've drawn out some market structure here in orange. Let me just really quickly go ahead and explain what it is and what it means and what it essentially shows in terms of a setup to trade. So as you can see, we have, just general market structure like this, and we have a high point here which we're going to call external liquidity, but it's not external liquidity until we get to this point. So we just got a nice high point. We know there's liquidity above there. There's liquidity built up above, and we know that at some point there's going to be a liquidity purge and a liquidity grab for that liquidity. Price pulls away, again building on that liquidity to the top there. We then get to this point where price is coming back, and we enter either our London session silver bullet zone or our New York session silver bullet zone. So you're probably thinking, when the zone, essentially it's whenever the London session and the New York sessions are open. I know some people on YouTube and those that trade ICT refine this a bit by a couple of hours, but honestly I've done the back testing and the results literally mean that if you refine the zone a bit, you miss out on certain trades, and obviously you don't want to be missing out on trades. So why not just keep it to and stick to the London session and the New York session. So that's what we have. So when we get to this point here, as you can see, purges the external liquidity. And now once we're in this area, we're in this zone, we're in the London session or the New York session, we're again looking for some sort of market structure shift. So price pulls away, we get a low here, then price pulls up, we get a higher high. Again, we're purging some more of that liquidity, but also we're taking the internal liquidity here, and that's very, very important. Once we purge the internal liquidity, it's very simple, right? On this move down, we're looking for a fair value gap, so that's what I pointed out here. We want a fair value gap here. Again, if you trade order blocks, you can look for an order block there as well. It's the same thing, depends on your entry strategy. I look for more fair value gaps now. We get the pull away, we get the market structure shift, and then obviously you come back, we enter, and then you move away. Now in terms of entry, ideally you'd want to see price action on either the 15-minute or the 5-minute. Same thing really, you're going to see external liquidity and internal liquidity purged. But for the, you can say MSS, the market structure shift, and the breaker structure, you essentially it's probably easier and you're more likely to see more of it on the 5-minute time frame. So I'd recommend the 5-minute time frame for that. And then I guess that's it really. That's what you're looking for. That's the setup. These are the time zones: London session or New York session. So as you may be aware, on the 1st of August 2024, I'll be releasing my journaling and analytics software. In order to join the initial waitlist and to learn more about its features and other information, please go to www.simulationfx.co.uk and enter your email address below. Things to avoid. Okay, so when it comes to avoiding taking this trade, and where I've seen from my backtesting where the losses are, it's generally when you're taking this trade towards the end of the New York session. And basically what happens then is you get, price comes in, you get your entry, you're targeting, maybe the Asian low, London low, or some significant liquidity point over here somewhere. But what happens is price will start to move down and then it will just fizzle out, and then next thing you know, you're trapped in the next London session over here somewhere, and you don't really want that to happen. So essentially what you want to do is make sure you're getting in at the right point, and if price starts to trend like this and it's not really moving to the downside, just exit your position. And more likely than not, you're going to be exiting in profit anyway, maybe 1 to 1, 1 to 2 or something. But get out, because at the end of the day, you don't want to get trapped into a move where price is just going to push upwards for the next Asian session. Or maybe you want to put your stops at break even, it's up to you. But for my back testing, I guess it doesn't really work out as often. So now that we've seen what the setup looks like for a selling position, we can just invert it. That's what the buying position is. Same thing really. Now let's look into and at some examples. Okay, so let's go through example 1. So as we can see, we have the Asian session, we have Asian high, Asian low. Price is sort of in a range, and we have these two high points. price has come down, it's taken the Asian low, and if I just move forward a bit, we can see price starts to move upwards. Now external liquidity can be mistaken for, you know, significant liquidity points, but it doesn't have to always be. We can call this external liquidity if price continues upwards, because if it pushes up, it will take this as external liquidity, and then it also, you know, hopefully take this one as well. And so that essentially allows us to mark out these two high points in red as external liquidity, and essentially from here all we're doing and waiting for is price to take this high, and then just start to go through our checklist, right? So if price takes this or these highs, as it does, it moves away. So now we know we have, you know, internal liquidity here that needs to be taken. So let's see if it gets taken. Boom, it does get taken. It also raids Asian high, so which is a good sign that price is going to move, because if you're thinking about the other systems I trade with the Asian session sweep, that's basically what's just happened there. Let's just label this one as the internal liquidity, and now finally we are just looking for a fair value gap in this move down. So if I just move down a bit, that we can enter from. So obviously we got one here at the extreme, and that's probably the one I'm going to go for. There are other ones as well, like this one here, but obviously you got to look at your risk to reward ratio. If I enter here, stops just above, you know, there somewhere, then we can target Asia low normally, but because London low is lower, we can just go for London low. And if you want to hold longer, just look left. If there's significant lows, maybe you can target that as well. But then if I play it, there's a market structure shift, that's a tick as well. So that's the final tick before price comes back to a fair value gap. You enter and then you move down essentially. And so there, so this now becomes the new target entry, and now price should run out and tap us in. And as you can see, let's see if price actually goes and raids this low. It looks like it will. Yeah, you could have actually got this, so a 1 to 5.6 trade, which is really nice. Now let's have a look at another example. Okay, so let's have a look at example number 2. So if we look at example number 2, I've sort of pushed it forward a bit because I want to explain some bits. So as you can see, obviously we've got the Asian session range, where here's the London session. External liquidity before this move down would have been this low here, so I'll just mark that out with a red line. And basically if we look at this move, so we get this impulsive move down, we take that external liquidity, and then we get this choppy move up. So when we get choppy moves like this upwards, we're not going to look for a buy. We're going to wait for the internal liquidity to be taken. So we get it here. Okay, so external liquidity taken here, and then we're looking left, and we still got some, you know, essentially something here, and we're not quite confident with this move. This move looks okay, but there's no fair value gap in it, so we can't really look for anything really. And then we get this move up, and it's just choppy price action. So when it's choppy, we want to be extra careful, but again, we're still looking for what we need. We need internal liquidity to be taken, so we can say it's, no, you can say it's this one, and then we're looking for a breaker structure, a market structure shift, and then a return to a fair value gap for an entry. We haven't got a fair value gap here on the 5 minute, so we're literally just going to see if price will come back lower. What price does do is it takes this internal liquidity as well. Again, it's a choppy market, we have to be extra cautious, and this is why I wanted to show you this particular setup and trade. Next thing you're going to do is literally just wait for a fair value gap. And as you can see, this move is a bit more impulsive and a lot better, a lot stronger than this move, right? Because it's clear candles compared to just choppiness, wicks here and there. And that's probably showing us that as we prepare for the New York session, the market knows which direction it wants to go in, which is very important for us. Obviously, this trading day is a Monday as well, and Mondays tend to be, you know, a bit slow, so it's always better to take, you know, extra precaution. Now looking on the 5 minute, we've obviously clearly got fair value gaps here and stuff, so we can literally just pick which one. I'm going to cover from here to here just to cover the extreme as well. Entry obviously would be here somewhere, stops below, and we are going to target, you know, we can target either this high to be very safe, but I always like to go for, you know, a significant high, and we can probably even get this one as well if we leave a runner. So if I just let price action play out, we get tapped in, and as you can see, it does go down to the extreme, which is nice. And then after faffing around for a bit, we get that move away, and as you can see, we would have you know, even gotten a 1 to 5.13 out of the trade. But yeah, that's the strategy. It's very simple, it's very easy to execute, literally a checkbox exercise. So I would recommend looking at it. Again, just to mention, I am releasing a journaling and analytics software very soon on the 1st of August 2024. So make sure you go to my website and you sign up, get entered into an email list where I'll be sending out alerts of when, where and how you can sign up to that journaling software. Thanks for watching, and I'll see you in the next one.